Happy Diwali, guys, and in advance. And guys, today we are going to talk about Dixon Technology, a stock which has given a staggering return of almost 88% CAGR return in last 5 years. Even this year, it is almost up by 178%. Let us talk about Dixon. That stock has fallen a lot after the result, around 10% to 12%, even though the result was very good. So we'll talk in detail whether at this level you should buy or not. But before I go, guys, again, happy Diwali, and guys, our Diwali offer is already on. Click the link in the comment box and check our products, that is stock recommendation service. Almost 70% discount is that. So I assume that you will go and check it out. So let us talk about Dixon Technology, guys. Dixon Technology, over the years has given a great return to their shareholder. And one of the reason, the way their mobile service is going on, it has come up, it's extraordinary. Okay, if you see this quarter only, the year on year jump is almost 235% jump year on year. Of course, there was one, and the profitability jump is also very good. But the one off is there because of one software, and no, that is where no there is a one off of almost 200 crore odd rupees. But otherwise, no, overall there is a big jump, and this jump is going to whether this type of staggering return, and you can say the staggering sales number will go on not, that is what we are going to talk about. Now when we talk about overall the business, no, if you see the PAT almost gone up by almost more than 100%. If I remove that one off gain which they got it, then also no, these numbers are quite good. But the problem what happened with this stock was then the stock has gone up a lot. And even if you see the last few years data, no, even though the sales and profitability is going up, but along with that the stock is also running a lot. So any type of one disappointment also, the stock is falling a lot. Like one disappointment which they had in this quarter, if you remove that one off whatever they got it, was that no, their margin got down by almost 30 bps. Okay, point. ओके, तो वो एक थोड़ा उनका एक नेगेटिव पॉइंट था कि भाई मार्जिन क्यों डाउन जा रहा है, एंड दैट वाज आल्सो वन ऑफ द रीजन. But at that time the market was falling, and no, because the P ratio of this company is quite high, more than 100, around, I think, if I am not wrong, it is almost, you can say, 158, yeah, 154 it is. Okay, so when you have this type of high P ratio, your number should be bomb blasting or extraordinary in order to sustain that type of rally. But when we talk about this stock, and let us discuss the result a little bit in detail. They have many client addition, all that. Again, smart to acquisition and compel partnership, that is what is actually helping this company. However, some of the things you have to keep in mind, that quarter three, the smartphone additions and all that, no, may not be that type of growth which we have seen, like 235% growth. No, quarter three will be little bit on a lower side. I think their sales will be around 2.3 million compared to what 2.7 million they are having currently, million units, I'm talking in units. So quarter three will be little bit 2.3, 2.4 million units. Quarter four will be much more better. We are talking about quarter two, and that is also market taking into consideration that by quarter three may not be so great as it was in quarter two. When we talk about the segmental wise profitability and all that, no, 82% is coming from mobile and EMS services. So mobile and EMS, as I told you, it's gone up by 235%. However, the margin, EBITDA margin in that segment is around 3%. When we talk about the home appliances, no, that is almost, you can say, around 4%, and the margin is higher, 11%, but बहुत ही छोटा share है, 4%. Light product revenue is around 2%. That EBITDA margin is around 7%. And when we talk about consumer electronics, that is more, 12%, but their margin also 3.7. So when we add a mobile plus consumer electronics, almost 94% is coming from these two segments, and their margin is around 3.7, 3.3. So even though big jump is coming in the sales, you will not able to see the big jump in the profitability. The reason is the margin contribution is quite less. So keep this in mind. No, see why this segmental wise sales and profitability one should see, because we have to see, where the growth, which segment the growth is coming. Again, whether this segment is contributing at a profitability, what type of profitability level it is contributing. If it is contributing immense, and then there'll be a big jump in the profitability. अगर वो नहीं है तो फिर एक problem है, okay, and it may not add to the profit so much. So that's why segmental profit one has to see if they want to take any type of decision also. Okay, again, if you talk about the smartphone volume, no, I told you year on year 235%, quarter on quarter also it was 98% jump. However, the raw material expenses no increased by almost 202 bps points. Okay, so 2% से बढ़ गया है, and that is also actually bringing the EBITDA margin down. Now company is very confident that in future they are going to have a good growth. Okay, like of course this year on year 133% year on year jump is there, but PAT has gone up by only 68%, not compared to the sales. Operating leverage का फायदा इसलिए नहीं हो रहा है क्योंकि the margin at a segment level is quite low, but they are quite confident that in future no there will be a good jump. Even if you ask, no, the average expectation is that no they make the sales growth will be about 30 to 40% over the years, for at least for next 2 years. Even when we talk about the profitability will be also around mix of around 30%. Of course their profit may grow at a lower level compared to sales, but yes, 30% growth is also not a small amount, no. Of course, again, guys, I have not invested in this stock. Many of my clients may have invested, then I don't know. But yes, just a disclaimer, as a research analyst, I want to put it: do your own research before investing. But the futuristic data I'm just giving you just to know, make you understand that know how the things may be going from here. Okay, and basically the key driver for this profitability will be the growing mobile and hardware segment that will be helping. Again, no, basically backward integration and component manufacturing, lot many thing manufacture is done on by Dixon technology only, and that is why no that backward integration is helping them to keep the margin alive. नहीं तो क्या है कि इन सब component में no, as I told you, mobile or consumer, you have 3.3 or 3.7% of EBITDA, which is quite less. Even 30 bps point here and there, no, that will dent on their profitability. That's why backward integration is very very important for this type of company. But you know, when you have this type of competition, so this type of profitability, your competition is going to be there. And the few, that's why the high competition which going to come in future will have an impact on margin. And the another bigger negative point you can think about your maybe happen, that PLI scheme. Currently company is focusing a lot on the PLI scheme. Any type of downward trend in the PLI scheme, or अब government को लगा भाई चलो ये तो सेक्टर सेट हो गया. Why they are PLI scheme normally they bring it? Because government is bringing it to in order to boost that sector. So once the government thinks that okay, this sector is already growing, no need of giving a PLI scheme or no need to give more incentive, then any type of going back into that will have an impact on profitability of this company. Currently ऐसा तो लग नहीं रहा है, but yes, this is what you have to understand when the PLI scheme expire, whether they are going to renew or not. So keep this in mind always. Again, as I told you, know that smartphone volume is going to grow, but at what pace, that is what you have to see. And also some of the other point I want to discuss here is that regarding the management and all that. See, management overall is quite aggressive. Okay, they are doing their best in order to increase the revenue through EMS and the mobile services. But at the end of the day, you also have to understand that what type of no valuation this company is deriving. So when I compare this company with any of the peers company, as a direct coordination is not there, but this is way higher compared to any other company in this segment. When we talk with Urban Technology, MIRC Electronics, all that, these guys are roaming around now 40-30 p, something like that, and these companies are more than 150 p ratio. Know that their profitability growth and is one of extraordinary over the years, and the order book they are going to see and all that, no, कि आगे जाके क्या होगा, looks also quite good. And they are actually, as they are doing a backward integration, and no, the profitability is may go up as the margin may improve. So you have to keep this in mind. This is one of the company, where you will see a quarter to quarter also jump and year on year also jump into the sales. This is rare thing to happen. Normally आप ऐसा देखते नहीं हो, लेकिन quarter on quarter जब sales jump होता है, then it's a very very positive sign. So if I see the quarter on quarter jump also in sales and profitability is around 75%, extraordinary. When we see year on year growth, I already told 133% sales jump and all that. But when you have a quarter on quarter jump, that means this company is doing really good. But that is already reflecting in the stock prices, correct? And you have to keep this in mind. Again, these margins, one point you always have to, their operating margin, all that is quite low, around 3.8%, no, which is very very low. And any type of short term no raw material prices movement here and there, or some unavailability of the raw material, will have a direct impact on profitability. So ये एक चीज थोड़ा ध्यान में रखना है. Otherwise ROE, ROC and all that is under control. 24% is 24 is around ROE, 29 is around ROC. So that is fine. उसमें कोई problem नहीं लग रही. The only problem which you have to think in mind, that whether the company will able to grow the way it is growing till now. A very very highly valued company, a valuation at the top. But guys, understand, when a company is doing well, when it is firing with all the cylinders, no, this company may go up also in future, provided they are able to continue with this type of growth. Any disappointed at a growth level, this स्टॉक में फॉल लाइक एनीथिंग. लेकिन पिछले 2-3 साल से तो हमने ऐसा देखा नहीं है. ये स्टॉक ने वन लेवल ही इसने परफॉर्म किया है. 88% CAGR every year, that means almost double in last 5 years. It's not a joke. It's not a joke. So you cannot discard this company, guys, because these are all growth companies, and growth companies will always ask you for the more premium, more you can say no, you will be paying much more for to buy this stock, correct? तो ये ऐसा ही रहेगा. But if you are a risky buyer, or no, if you are, then you can think about this stock. Okay, for long term it may do well, provided the growth will continue. That you have to closely look at, but it's not a value buy, that I can give you a surety. If you are thinking of a growth stock, you can think about this. Again guys, do your own before investing. I just given this video now to make you understand where the Dixon Technology is standing. Hope you like this video. If you like it, do like it and share it to everyone, guys, and do subscribe to our channel. Again guys, as I told you, happy Diwali offer is going on. Click the link in the comment box. At least go and check out our recommendation size. We are giving a big discount on our combo services, that is profit multiplier. So go and check it out, and I'll be see you soon in the next video. And if you have anything related, comment to anything of your stock or sector, put it in the comments. I'll do reply for sure. Thank you very much for joining, guys. I'll see you soon next time. Bye bye.